Okay, peeps, welcome back. So today we're going to be going over the macro market overview for July of 2021 or 2024. So with that being said, let's get it. Okay, I don't know why I said July 2021. Sorry about that, y'all. So it is 2024 right now. So July 2024, again, you guys know how this video goes. We always start with the SPX, or basically the actual S&P 500. So let's go over that first. Okay, so before a while back, you guys can see we had a death cross, but then we had a golden cross again on both the RSI and the MACD. Typically speaking, when we get some kind of hitting overbought on the RSI on any of these major indexes on the weekly time frame, we usually get some kind of deep sell-off. You can see it happened here. This was more prolonged. That was basically last fall. And then we had a little tiny blip right here in March and April. That wasn't really much of anything. And then we kind of just went up. So in terms of technicals, markets still look very bullish, I would say. So we actually did not even come down and retest this support zone down here. If we get a bigger retracement, it's possible we come down and test this. Like we'll say, for instance, I don't know, the yield curve uninverts, the Fed's cutting rates, and we get some kind of major 20% drop or something like that. Then we could actually pull back to this previous macro all-time high back here during the peak of 2021 and use that as a retest level, basically to bounce off of and go higher from that point. But as of right now, it still looks very bullish to me. So EMAs are nice and widely spread out, which is a very bullish sign. The price action is still in the channel. We got this breakout of this downtrend. Everything looks very bullish as far as I'm concerned. So the top of this channel as of right now is 5,800. That lines up perfectly with Tom Lee's prediction. Again, I think it's possible that we may actually go to 6,000 by the end of the year on the S&P. Again, that would not shock me. If you guys can actually see, the top of this channel as of right now would be at 6,000 by August. If I were to really drag this out, let's just say it does stay within the channel for the entire year. Again, I don't know that that's really possible, that it's going to happen, because eventually the Fed's going to cut rates and we will get some kind of pullback. I suspect it's not going to be that big, but it could be as high as 6,600. I don't know about that, but I would say somewhere between 5,800 to 6,000 is definitely possible. So in terms of a pullback area, we're kind of looking like pretty much we want to take a look at this trend line. So 5,300, maybe going into next month somewhere around 54, 5,500. So not really sure there's a whole lot of downside here, if I'm being completely honest. So there's one more thing I want to look at with you guys, and this is not really relevant to what we're looking at right now because the market's bullish. This would be more so if we were looking for a bearish scenario, in which case we would be looking for that bull bear indicator that we have, which is the 200-week SMA. So I can go over this again. As you guys can see, we're pretty heavily overextended from this thing, but this thing has been a major retrace support level since basically 2011. So going on almost 1.5 decades at this point. So that level currently is all the way down here below this macro trend line, as you guys can see right here, all the way down here at roughly about 4,300. If the market does if we do go into some kind of recession, which again, I don't think is going to happen, and it does get a major pullback, again, this isn't much larger than what I was predicting, which is, if the yield curve uninverts, which eventually it will, and the Fed cuts rates and things look kind of bearish for the economy and whatnot, maybe we might see like a maximum of a 20 to 25% drawdown on the S&P. That's just my opinion. I could be wrong about this, but I'm pretty confident in my estimation here. So we'll go ahead and throw the 51 EMA back on. So let's now go over to the NASDAQ. So NASDAQ, very similar thing. So we got a death cross, then a golden cross, same thing on the RSI. So we are still technically in overbought territory in the NASDAQ. This thing actually went outside of the channel and just started ripping to the moon. So I actually got to change this pattern here from a channel to a rising broadening wedge. So that's pretty much what we got right now. The top of this thing is at 21,300. Based on this candle right here, I would say likely the NASDAQ is probably going to go higher next week. Because again, we kind of had this up and then shifting sideways, and then boom, we popped off to the moon. That's a very bullish sign. So in terms of pullback, again, it's going to be somewhere along this trend line. So we're looking at maybe around 18,200, 18,300 going into next month, somewhere around that 18,200 to 19,000 level. I mean, the risk here is not really all that substantial. I mean, even if we do get the pullback, maybe 5-6%. Again, you guys got to remember bearish seasonality is right around the corner. Generally speaking, it's usually September that's the most bearish month of the year for crypto and stocks, but somewhere between August to October, it's not always consistent. So a small pullback could be just right around the corner. I mean, this thing's been going up for a while. It wouldn't surprise me if that happens. So just do keep that in mind. In terms of upside targets, I mean, seemingly the sky is the limit here. So you're looking at maybe around 8-9% to the upside over a $22,000 NASDAQ. That's obviously very huge. So Russell 2000, for years, literally years, we were trying to get above this level after that massive bear market we had in 2022, and we did finally ultimately get above it. So I'm actually going to remove these lines because I don't think these lines are really relevant anymore. So we're kind of in this channel, or what could be perceived as a bull flag. I suppose if you wanted to call this thing a bull flag, it would be a pretty large flag. So I'm going to try to get this thing out of here. There we go. So you guys can see that would basically put the Russell 2000 at new all-time highs, because the previous all-time high for the Russell was 2450-ish, 2460, somewhere in there. But again, the smallest market cap companies will be affected in the negative sense the most by the Fed funds rate going up. So when the Fed cuts, these things have the most room to run up, in my opinion, and crypto, of course. So support, we're looking at roughly about 2,000 here on the support. We are sitting in the support right now. Just to go from the current support to this previous swing high is a big move, 5.5%. A lot of the small caps are probably going to go up like 10, 20, 30% based on this. If it goes down, retests, and then pops to the upside here up to the 7.22% move, I mean, then the small caps could go up even more than that. Overall, I would say I don't know, I'm kind of neutral / bullish on the Russell. It does look bullish now that this has flipped from resistance into support, but we need to see a break above these previous highs for me to be fully convinced that this thing is going full bull mode. So Dow Jones, this one is basically pretty much in a channel. So we're at the bottom of the channel. That's a very bullish sign. Generally speaking, that does mean that we're going to obviously head to the top of the channel. No guarantees, but that's what it looks like. So Russell 2000 is, I mean, the Dow Jones, I should say, is almost at 40,000. That's absolutely bonkers. It was actually there once, so that's a new all-time high. Again, the top of this channel is massive to the upside, so almost 43,000. If I measure this going into, let's say around August, I mean, you'd be looking at about a 10% gain, so about 43,600. Let's remeasure this one more time just to make sure that's accurate. I mean, it could be even more than 10%. Let's just say maybe towards the end of August, beginning of September, maybe it's around 44.6. That's a pretty big move, 13% to the upside. I don't know that it moves up that fast. Maybe kind of somewhere halfway in between the channels, so 41,000, 41,500, somewhere in there. But it's at the bottom of the channel, which is generally a bullish starting point. You can see these big rips from the channel at the start here at the channel. It's above the EMAs, it's above support. Both of these indicators down here are in the bull zone. Everything looks very bullish on the Dow. So now let's go to the stocks above the 50 and 200-day moving averages. Okay, so stocks in the S&P above the 50-day moving averages. I mean, it's pretty much in no man's land, not bullish, not bearish. It is below the 50 level, which generally is a kind of a risk-off environment for swing trades. Doesn't mean money can't be made. It just means that generally speaking, not everything is going to rip to the moon for a swing trade. So again, once we get in this buy zone, that's generally speaking the best time to buy. Up here is the best time to sell. So I mean, I'm kind of neutral on this thing. I don't think it's neither bullish nor bearish at this point in time. NASDAQ, this one is above the 50 levels, so that is a risk on, in my opinion, for swing trades. Seeing this, if we were getting into NASDAQ related stocks, we would feel pretty comfortable at this point getting into swing trades, seeing this above the EMAs and above 50. Again, best time to buy down here, best time to sell up here. And as you guys can see throughout history, there's the occurrences of getting those perfect dip buying or rip selling opportunities are pretty rare. They've only happened a handful of times in the last 4 years. So now going to the S&P stocks above their 200-day moving average. As you guys can see here, we're much closer to the top of this thing, which indicates potentially maybe some kind of pullback coming. Again, September is 2 months away. That's the most bearish time of the year. This is the best time to buy down here. This is the best time to sell up here. Not financial advice, but as you guys can see, we've only hit these levels at the bottom 4 times in the last 6 years, and only 1, 2, 3, barely touched it here a 4th time in the last 4 years. So this is, whoops, wrong one. So we got the stocks above the 200-day moving average on the NASDAQ. Again, this is, I would say it's bullish because it's above the 50, but I would say it's bearish because it's below the EMAs, which indicates we may still be in a downtrend on this. Again, I'm not expecting this thing to really dump off until probably about September timeframe. Like you guys can see right here, we got that sell-off in September and October and then a rip towards the end of the year. Plus, we have elections coming up, so there may be some uncertainty in the markets that happen September, October timeframe before we actually get the official election results in November, which again, my money is on Trump. So now going into the inverted yield curve. This one's pretty basic. I mean, we've talked about this month over month. So what we're looking for is the 2-year yield rate to come back down below the 10-year. So the 10-year is currently less than the 2-year, generally speaking, when the yields are normalized, meaning the yield curve is not inverted, okay? So the Fed's not having to raise rates. Usually the 2-year will yield lower than the 10-year. In this case, it's inverted because the 2-year is yielding higher than the 10-year. So we're looking for the 2 to come below the 10. And as of right now, there's only a 30 percentage point spread, which means it is tightening. As a matter of fact, if I overlay this, let's do US, let's see, 0 to Y, US 10Y, if I'm not mistaken. So this is kind of a different looking chart, but pretty much what we're looking for here is, as you guys can see, Fed raising rates, the yield curve is widening between the 210, right? So what we're looking for here for this thing to uninvert is for it to come back down below 100%. If we get this below 100%, that means that the yield curve has uninverted. That means potentially there may be a market crash on the horizon or at least some kind of pullback. That does mean that also the Fed is likely cutting rates because we're not going to see that uninversion until they cut rates. So that's what we're looking at for that. So inflation. Inflation's looking very good. So 3.4% on inflation. It recently dropped 0.2 on the core inflation. I don't know why this is showing up as line with markers. Whatever the case. Okay, so headline inflation down to 3.3, again down 0.1%. So it's good that inflation's coming down. I suspect the Fed's probably going to cut once inflation gets somewhere between 2.5 to 2.9%. That's just my opinion. I could be wrong about that, but I don't think they're going to wait until it gets exactly to 2%. That seems a little stupid in my opinion. Okay, so unemployment rate. As I've told you guys before, seeing an uptick on this thing is not a good thing. Again, we do not want to see a golden cross here. If we see a golden cross, that would not be a good idea. That would not be a good sign. We've already seen that on these 2 indicators here. The unemployment rate has ticked up month over month for quite a while now, and that's not great. As you guys can see, it's been going up since basically a year ago. Generally speaking, every time we get one of these golden crosses, the unemployment rate just completely skyrockets. It's a rare occurrence because, again, the Fed's trying to fight inflation. But yeah, it went up 0.1% again, so that kind of is a little bit alarming in my opinion. We'll have to continue to keep an eye out on this one. So now we're going to go to oil. Okay, so oil chart. This is the weekly, as you guys can see here. So this thing looks very bullish in my opinion. So we have a high or a low, a high, higher low, and not quite a higher high yet, but it's heading on that trajectory. So pretty much need to see something like this into resistance. But time will tell with that. We'll just have to keep a lookout on it. So as of right now, we got a golden cross on oil. So that's generally speaking bullish for oil. I mean, there's a lot of conflicts going on overseas. So does it really surprise me this is going up? Honestly, no. Generally speaking, the Fed's not going to cut rates unless they feel like they have inflation under control. Oil going up is inflationary. It's not a good thing for the Fed wanting to cut their rates. If they see oil going up, causing inflation to go up because oil is going up, they're not going to want to cut rates. Maybe they want to cut rates. I don't know, but I just every time this thing goes up, the CPI goes up, and that's just not good. So in terms of buying and selling, so 61.80 to 76.84. 91 to 94.48. In my opinion, the best time to get into dividend paying stocks, anything dividend related to oil, is to get in this zone down here. So now let's go over metals. Gold is just on a tear. This thing is absolutely ridiculous. So I would not buy any gold at this point with a 10-foot pole because it's just so detached from reality. I mean, look at this. If it went back to the yellow EMA, it'd be at these previous all-time highs here. That's a massive drop. So I'm not saying that's going to happen. This chart looks very bullish, but you can see it would pull back 14%. As you guys know that stack precious metals, you do have to pay a premium to the coin shop when you buy these. So are you going to get a $2,400 spot price on gold? Probably not. So again, I wouldn't touch this right now. It's just too bullish. I'd be looking for some kind of pullback to $2,080, $2,100 at the very least. But for anybody that bought back in this area down here when it was at the lows, I mean, hey, dude, you're sitting on massive profit. So good job. Silver, same thing. This thing just had a massive breakout. As you guys can see, it broke above this previous all-time high, and then it broke again right here. So I suspect silver is going to keep going higher. Of course, we have this inverse head and shoulders. The target here is $38. I wouldn't buy silver right now. I would either wait for it to come to, at a minimum, $28, $29, or maybe all the way back to this trend line somewhere, or the EMA is roughly about that $25 range. Palladium, this one's about as cheap as I think it's going to get, but you guys can see on the monthly time frame, it does look like we're about to get a bullish signal here on the golden cross on the charts. So palladium may be heading back up here shortly. It's hard to say. It does look like it's kind of bottoming out at this support at 900 to 1,000. I would say, just my opinion, of course, not financial advice, but I would say palladium is probably a pretty good buy right now. I mean, if you take a look at the reward to risk here, it's huge. I mean, the last time palladium was lower than this was all the way back in 2017. The risk here is basically down to this line, which is a decent drop, but not really that huge, roughly about 10%, compared to if it goes back to the highs, the move is absolutely monstrous, 235%. And again, the highs would be somewhere between 3,000 to 3,400. Platinum, still say platinum's relatively cheap. I wouldn't want to buy unless it's at least at the top of this range at roughly about 800 to 850. Bottom of the range, 750 to 800. But then again, even at these prices, I mean, the upside potential here is huge. So roughly about 87% to get all the way up to 1900. So you'd be looking at about 1750 to 1900 on that one, versus the risk here is much less than the reward, so about 25%. So copper, no sell-off in copper. That's a good sign because copper is a strong indicator of demand expansion or demand destruction. It depends on which direction this is going. If copper goes up, that means that demand is strong. If it goes down, that means demand is weak. Okay. again, you guys can kind of see the flash crash from the pandemic here. What happened? Copper went down. What happened? Demand went down. Kind of similar thing with the bear market here. And then, of course, we've recovered since then, so it looks good. But in terms of buying, I wouldn't buy this right now. Again, it's pretty much sitting at all-time highs. As you guys can see, it's very expensive right now. So support 130 to about $2, and the resistance up here 410 to about 510. If it does pull back, which I suspect it will when the Fed cuts rates, because again, money's going to flow out of money markets, gold, and cash equivalents into risk on assets. The drop here could be huge, roughly about 72%. So I'm not going to go over Bitcoin. We already went over that previously, or we go over that in a separate video, I should say. So let's go ahead and go over the DXY here. So when is Bitcoin likely to pop off based on the DXY? Again, DXY and Bitcoin have an inverse correlation. We need to see a breakdown of this trend line and the support in the EMAs. If we can get below all three, head towards this trend line at roughly about 95. I would say that's very bullish for Bitcoin. Again, that likely is going to happen when the Fed cuts rates, okay? Because when the Fed has rates at all-time highs, people can get a 5-6% return on high-yield savings or bonds or precious metals or anything like that relatively safely without risking their money in a bear market or a pullback in the markets while the Fed funds rate is at all-time highs. But when the Fed cuts, the dollar is probably going to sell off because, again, people will move their money. There's $6 trillion sitting on the sidelines out of cash and cash equivalents into risk on assets like Bitcoin and like stocks. So last thing here I want to go over is the VIX. So again, I suspect we're not going to get this spike in VIX until either one of two things happen. Either the economy goes down the drain because the Fed waited too long to cut rates, or the Fed cuts rates and we get the inversion of the yield curve, or both. If that does happen, some kind of massive spike might occur. That may be the time to be loading the boat on risk on assets. Of course, we don't know how large the downside could be on that one, if it's even going to happen at all. But as of right now, the VIX isn't doing much of anything. I mean, there's not a whole lot of fear in the markets, so we'll just have to keep you up to date on this one. Anyways, this is the macro markets overview for July of 2024. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.